Welcome to the FNO InsurTech Podcast, a place where movers and shakers from all points within the insurance ecosystem gather and discuss all things InsurTech. Here are your hosts, Lee Boyd and Rob Beller.
Hey, podcast world, welcome to another, really, and I'm not kidding, Lee.
Okay.
I'm not kidding this time.
I'm glad.
Special episode
Super
of
special.
FNO InsurTech. Special episode.
It's a big one.
It's a biggie.
How did it take us so long to get this one out?
I don't know. We've been trying. I've been trying because, of course, we all know that I'm the co-host in charge of procuring
Getting
guests.
people? Yeah, getting
Right.
guests.
Yes.
I've gotten a couple.
Have you 270 some episodes and you've gotten a couple? That's really good, Lee.
I've got a percentage of them, yes. And
That's
you're always
really
a little
good.
negative, but after we talk
200
to them, you're positive.
270 some episodes and Lee's gotten 3 guests. That's good.
No,
That's
I
better
bet
than
you.
that's better than 2.
I'm close to double digits in the percentage.
This is what I want you to do. Here's
I'm
my
not going to.
You got to go
I'm not
you
going
got
to
to go back through the
Just
list
take my word for it.
and you have to find the ones that you're responsible for and the ones I'm responsible for, and
No, because you're not going to
let's
let
keep-
me take responsibility. I'm going to say I found them. You're like, no, I
No,
found them.
that's absolutely true.
Yeah,
That's absolutely true. I don't like when the spotlight shines on you.
I know.
I
That's
don't like
That's why you're the host and I'm the other guy.
That's right. That's
I
why
forgot.
that's
I
why we have
forgot.
titles.
I know. I forgot. I probably ought to change that.
You think it's coincidental that we have titles? Not at all.
No, we'll leave it the other guy.
And so everybody knows recently Lee decided that I should be called the host of FNO InsurTech. And he should be called, that other guy.
That other guy.
We just
That other
shortened
guy.
it to the other guy.
Yeah.
And because Lee was tired of the facade, the masquerade that we'd been living inside of
All
right?
these
Is that-
years.
all these years.
All these
all-
years.
All these years.
You
all
know,
these
remember there used to be another guy on the podcast.
Yes, I do remember that.
At the very beginning, it was you and me and the other
Mhm.
guy.
And the other guy.
Yeah. He was only on a few times.
Now he's a restaurateur.
Yes, he is.
He's a
Yes.
restaurateur.
High-end steakhouse.
And some of us are still on the
Do-
podcast.
Doing podcast.
Some people have built restaurants and other people are still doing the podcast.
We built audiences.
We did. And we love our audience and we're good to them. And we're so good to them that you know what?
Tell me.
We have a super special guest. We have a longtime InsurTechie guy. Long
Mhm.
time. Like from the late 90s, I think, or so.
Yeah.
All the with a few different companies all the way up to now. We're honored to have Max Drucker, CEO and co-founder of Carpe Data, with us today. At long last, a great get for us here at FNO InsurTech, and thrilled to have him with us.
He was a wonderful conversation to get to talk to. We get to dive into what is Carpe Data. What do they do? How are they different? We get to talk all about that, and then we get to talk about him, and then we wrap it up with some AI talk and the future of AI. I mean, just a pleasant, unbelievably brilliant person to talk to.
And his very insightful view of AI and what's going to happen with it, as well as his very insightful view of the business and his business and what they do and how they do it.
Yeah.
Great. And we have to throw a quick shout out here
Okay.
to Astrid Maval Bahari. Did I say that right?
Well, she's
I'm not going
on
to
the-
ask you,
She,
of all
yeah,
people.
she's
Of all-
not going to correct you right now.
Astrid is runs a business. You've heard us mention Astrid many times. She runs a business called Strat Maven, and Strat Maven provides strategic thinking to all corners of the InsurTech business, and there is no one better at it, no one who works harder at it, no one who takes it more seriously and has more knowledge than Astrid. And so
Amen.
please, if you ever have a need in that regard, reach out to her. And with that, I'll say, without further ado, here is our interview with Max Drucker, co-founder and CEO at Carpe Data. Hey, everybody. We are here today with a super special guest, somebody who we've wanted to have on the podcast for a long time and who many of you will recognize immediately, and the company that he founded. We have Max Drucker, CEO and co-founder of Carpe Data. Welcome to our podcast.
It's great to be here and a pleasure to meet you both.
Well, thank
Welcome,
you.
Max.
Thank you. We're going to shout out Astrid Malal Bahari immediately, who facilitated this to happen. So thanks, Astrid.
Thank you, Astrid.
Yes, thank you, Astrid.
She calls herself our first groupie. Little does she know she's our only groupie also. So it's a very exclusive club. Anyways, we're not here today to talk about our fan club. We're here today to talk about Carpe Data and some insights about your company. So let's first of all, let's kick off. And where are you coming to us today from?
So I'm based here at our headquarters in Santa Barbara, California.
Wow, that's a really nice
Beautiful
place.
area. Beautiful area.
I'm not gonna lie, it's not a bad place to live.
And I would describe it as like all the best of Southern California weather, but not as bad. But even better.
It's certainly more mild, but it's not as warm at nights. And we have our moments and we have some gray, so it's certainly not a perfect climate.
Okay. And I used to surf nearby there, and it's just a magnificently beautiful area. So good for you. Let's jump right in, and let's start by giving the quickie on what is Carpe Data, and tell us a little bit about your company and what it is that you do there.
Sure. So Carpe Data is a data company through and through. We make data products specifically for insurance carriers for two key purposes. The first purpose is for that data to enable automation of creating data products that can provide a carrier with the confidence to make an automated decision. And the second purpose of the data that we create is to improve insurance outcomes. So it's really about predicting the future, whether or not whether there's going to be a loss, whether there was fraud, whether there's a retention risk, however it is across the spectrum, whatever might be defined as an outcome that an insurer will specifically be interested in, we develop specific data products to help drive those outcomes.
Wow.
And you guys aren't new to this landscape. You've been around for a while, yes?
Well, that's right. I think in our preamble, you referred to me as a dinosaur in this space.
Lovingly.
And I don't take great offense to that because it's factually accurate. What can I say? So I began my career actually on the technical side. My first job out of college was at Apple, but from there very quickly I became part of a startup called eCoverage, which became the first online auto insurance carrier. And so we built the technology platform to sell the first auto policy on the internet in 1998. So my background really from the very, very beginning has been about bringing technology and really the internet to insurance carriers. eCoverage blew up in brilliant glory as part of .com 1.0 washout. Out of that, though, I co-founded a policy admin company that was called SteelCard that made software for insurance carriers, very similar, to enable them to quote and issue policies on the internet. So really, my entire career, I've been developing technology and working with carriers. SteelCard, I ultimately sold to ChoicePoint, which is now became LexisNexis acquired that company. So After that, I took a few minutes away from the industry, taking a deep breath, only to really come back in full glory in 2010 to found a company that was called Social Intelligence. And we thought about risk very broadly and leveraging alternative data, online data for use cases across employment and across government and also insurance fraud. Those first 5 years, as we were really trying to find our way, we ultimately determined that insurance was the best place for the type of data that we were looking at and where we could really create the most impact and the most value. So in 2016, we pivoted and became Carpe Data, as you know it today, to very specifically build data products for insurers for those uses, to drive automation, to improve insurance outcomes.
So it was a great big pivot.
It was a great big pivot for us as we really got our focus and we really saw what was working.
Uh-huh.
And while the other areas were certainly interesting, my background had been in P&C. I'd spent my career working with insurance carriers. The dynamics of the industry were, I think, ripe for a new next generation data company for insurance. However, look today, you have really very large companies that serve the insurers and not a lot of them, and not a lot of smaller companies that are forward on innovation, forward looking out there, experimenting, looking at the vast array of new data types, alternative data, new approaches to data, what could be used in AI, and then applying all of this new stuff, frankly, to insurance specific use cases so we could package those up and be able to directly communicate towards value toward an insurance carrier. This is what this does for you. This is the impact it's going to have, whether it's going to predict loss and be able to see improvements to loss ratio, whether it's to predict fraud and avoid paying too much when it isn't appropriate, or whether it is to remove manual processes to be able to increase consistency across whatever that workflow journey is.
So we've talked many times on the podcast, because we've had other episodes where the company was founded and there wasn't much insurance intelligence in the founding group, which was more common several years ago in the insurtech world. You'd have some tech people get together and start an insurance provider company, and sometimes that enabled the target to be missed, I think. But you were an insurance guy, right?
So it's really the opposite. I was an insurance guy that thought I could do a few things outside of insurance, and I was just completely wrong. Because the only thing I know how to do is insurance, because it is different and it's a very specific language. And I think we definitely did see a lot of, wow, there's this new AI technologies out there. Oh, insurers, they must need this new stuff because they're big companies and they must be antiquated or legacy carriers. And we have all these new ideas. We're going to apply new ideas to insurance carriers. And I think that approach is really, frankly, wrong and really very, very backward, because insurers, in fact, are the original data scientists. Insurers are the original creators of predictive analytics. They've been predicting outcomes for literally centuries, whether it's mortality tables or whether it's weather patterns or however it goes. Insurance has been a critical product that's been necessary for the growth of the industrial age and through what we've seen over the last 2 centuries to enable companies to take the risk they need to be able to take by having that safety net underneath them. And so insurers are really the best of the business at predicting outcomes. And so for us, where we found the opportunity is, well, they're really good at predicting things. However, they may not necessarily be good at refining this vast array of crazy data that's out there. There's so much stuff that's out there, and always looking for what is data that's going to be able to give me a competitive edge, or what's data out there that's going to protect me against facing bad things like adverse selection. And so for us, that's really our niche's bit, is finding the data that's out there, doing those approaches to that data to be able to find those very specific use cases that will provide measurable value to insurers in understanding their language and understanding what type of things are going to provide value to the insurers. Also understanding that there's very complex regulatory frameworks. There are very complex privacy frameworks. There are very complex systems and legacy systems and other challenges that insurers face, and being able to work through and navigate all of that like has been our secret sauce and our competitive advantage. And that's why we love what we're doing. Is there are a ton of companies out there that understand all of these challenges and are taking the latest and greatest and newest things to this market.
Wow, that's absolutely amazing. I want to take a step back slightly on the actual data. Whenever you started the company, like, how does that work with the data? Do you go out and get as much data as possible and then say, what can I do with it? Or do you ask the question and try to solve a problem and go out and find individual data sources? What does the mind do there?
So it's a really great question. And it really is both of those two things. So if there's some type of data that's out there that seems like it might be interesting, we'll internally brainstorm, how might this be applicable? How might this create value for an insurance carrier? So an example of that, and really how we got started, was in the space of social media, online content. And carriers were just beginning to understand that they might be able to identify fraud, injury fraud specifically, by people's postings on the internet.
Sure.
But really not having a great way of, how do I take advantage of this information? How do I apply that information at scale? How can I create a consistent process, right, using this data? So then that became the challenge that we set out to do, is how can we, and what we've ultimately been able to do is, how can we look at an entire claim population, number one, consistently? So how can I take a completely unbiased approach to the entire claim population and do it at a price point where I'm finding things that are relevant for the carrier that they want to know about, yet ignoring everything else? Because the last thing carriers want to find is noise, right? Because that's the biggest challenge. There's so much garbage.
And there's
out there.
so much noise.
There's so much noise. So we worked through a process of really refining and saying, okay, how can we automate these steps? How do we use it? When we first really got started, the versions of machine learning and AI that were possible at that stage, how can we use that? And then how can we get to refine? How do we use this information? How do we use the data exhaust to get better and better and better, to be able to create, again, a product where we can look at, again, an entire claim population, being able to, at a price point that really makes sense for a carrier, where they can find all of the information that will be helpful in resolving that claim, be it whether we're looking to reduce the severity from exaggeration abuse, or whether it's about closing a claim more quickly via corroboration and being able to confirm the claim facts and close that out. So first part of that question, it was looking at what's a cool data source, also understanding a different problem, to really putting these two things together. So those things, the two things really come hand in hand. So sometimes a carrier will come to us with a specific problem. They want to be able to automate small commercial, for example, right? Today, there aren't a ton of great data sources that are consistent to enable straight through processing for small policies. And small policies are relatively small. So manually underwriting them is costly, but if you don't have great data sources, it becomes very difficult. And so a number of carriers came to us and asked us, could we provide them consistent data on businesses across the US to be able to help with selecting that business? What's the classification? What does business do? Where are the specific risks? What's going to happen? What's going to be the outcome? How can I differentiate business A versus business B? What business might be more likely to have a loss than another business? And so that was something that several carriers came to us with. And so then we set out to find the right data for that. And that became, okay, what's out there? And we looked at a lot of different data sources, including what's available online, what's available in various social networks, what's available on those given business websites, and put all that data together to be able to build a data set specifically for this small commercial use case.
When we started, studying about your company, it was really super interesting to me that one of the things that you help carriers understand is, what does this company do?
Yeah.
Right? Like Joe's Bar and Grill. You would think it's Joe's Bar and Grill, and I'm sure it's been underwritten like that, forever, right? But it doesn't take into account that they also rent out jet skis or whatever the case may be. And the opportunity to miss on the underwriting during the underwriting process is high because of the differentiation of all all these companies. And to me, that was a fascinating service, basically, that you provide on the underwriting side.
So I think that's a really great observation about really what we're looking to do is we're looking to give carriers a selection advantage by knowing more about that business and being able to consume that data in an automated and consistent way. So yeah, the example you give, being able to determine the difference between Joe's Cafe and Harry's Cafe, they might look the same on paper by traditional metrics, but what you can learn from the online presence, what's in the reviews in other areas, can really tell you a lot about that business. And what we can't tell you is certain types of information and complaints that are in those reviews are indeed predictive of loss relative to that business that doesn't have those within a 12-month period of time. And that gives that carrier an advantage to be able to avoid those bad risks. And frankly, also to avoid the adverse selection that comes from carriers that are using this data where people are saying really bad things specifically about this business, or we know a contractor where people are saying certain types of things, he is indeed more likely to have a loss. Well, those carriers that are leveraging this data and using it are avoiding all of that bad risk and not facing that adverse selection, which you see in a relatively short period of time show up in their loss ratios.
Right. And are you seeing, is that the case, that you're getting that kind of validation from the carriers that says that our loss ratio is improved as a result of using your product? I mean, is the correlation, is there a correlation there?
I mean, absolutely. And that's the reason that we exist. We work with 45% of the top 20 carriers. We work with most of the large, small commercial carriers, and they are seeing these results by, again, being able to avoid those very bad risks, especially in people that are using our product, being able to automate that and being able to consume this data via, we have indexes where we can look at the customer ratings on the reputation. We have proximity scores. We have loss propensity scores. So we have various other metrics so carriers can pull levers and build into their models this data that's highly predictive of loss. And so we are seeing that, and that's why people work with us.
Yeah.
So what is your bread and butter? I know we have the business characteristics, we have the fraud. What is at the core? I mean, if a new company's coming to you and say, what, how do I use your services? What do you tell them? What services do you offer?
So our core offerings break into really two buckets. There's the first case, which is the injury fraud, as I sort of touched on. And so for us, the way we see it's really a no-brainer. We take the entire population of injury claims, whether it's BI claims, whether that's workers' comp claims, disability claims, and we're able to uniformly look across that entire population. Then once we done that, monitor those claimants to identify things that are consistent with a claim or not consistent with a claim, and provide that information proactively to the insurance carrier based on the online presence of those claimants. And so it's a no-brainer for reducing BI severity. It's a slam dunk from an operational efficiency side. Many places are doing searches themselves or doing ad hoc searches. Some firms are picking a small percentage of those and sending those to maybe an SIU group or sending those to a third-party investigation firm, and they'll maybe do a whole deep investigation on that, but only for a small percentage of the claims. And so, yeah, our real value add is we look at all the claims, we tell you where there's something that's relevant in that, able to do it at a price point that really makes sense for the carrier, that drives a very, very big impact for that carrier to identify all of that potential fraud, exaggeration, abuse, also helping close the claim cycle faster when appropriate. And it's just a really easy off-the-shelf out-of-box solution that doesn't require integration or really, frankly, much brain damage across the board. So that's really the fraud part of our offering. And the second part is the small commercial data. So we built a data set that we call Minerva. That's over 45 million businesses in the US that enables the carrier to identify what this business does via classification, where there are specific risks. Does the restaurant have a balcony? Do they have a dance floor? Do they have a bouncer? Do they have the deep fryer? Does the nail salon do waxing and tanning? Does the landscaper do trim limbs and other dangerous activities? And so we built a data set across the online presence of those businesses, respond in sub-second response by half of this massive data set to help be able to, again, identify and determine where those risks are. But then we also have created a whole set of indexes to enable to find that what is more likely to predict loss. Where is this contractor more likely to have a loss than this one? Is this landscaper conducting these activities? And how does this landscape or compared to other landscapers that look otherwise the same on paper? And so we make that data set available to, again, a large portion of the top small commercial carriers.
Do you, is there scoring involved
So we
on the
do,
underwriting side?
so we sure do. So what we really look to do is for the carriers that are the absolute most sophisticated and have really very large actuarial data science departments. One of our customers, hey, they've got more than 1,000 people that we call an actuary,
Wow.
data scientist, and a data engineer, right? So we work with some of the very most sophisticated carriers that do have these very sophisticated departments. And so for them, they're not really looking for us to build them a score or call it a loss propensity model. Right? They're looking for the components. So we build them building blocks that come from this data that they can plug into their own models and build their own scores.
Right.
However, for a lot of other carriers where they don't necessarily want to do that level of analysis or don't necessarily have the time in order to do that. And so then we do have off the shelf, we have a Carpe risk score. We have a loss propensity score that takes into a number of things into account so they can really help even sort. Often sorting is a challenge, which I'm never going to get through all these applications again anyway. Which one should I look at? And so we can really help with that. And so it really varies on the appetite and sophistication of the carrier on what level. But for us, we really provide sort of raw data to building blocks all the way to off the shelf scores so they can really figure out whatever is most appropriate for their use case.
Do agents figure in at all in your work?
Not really for where we are. By the time it gets to us, it's gone through some sort of broker or an agent. And maybe we were present in a UI that a broker or an agent had used that helped pre-populate information or help narrow a workflow. But it will also come into what a pricing decision might look like, what an underwriting decision might look like, what a renewal decision might look like. That happens on the back end.
Right. Or the back and forth that occurs before something gets underwritten, clarifying questions, whatnot. But not
right. Because ultimately what we're looking to do is remove the most friction possible, right? We want there to be as seamless a process for a broker or an agent when they're working with certainly a small business. And there's so many questions and so if we can help narrow that by pre-populating that or helping we put into a flow, which we do for some of our customers, it makes it a better experience. And again, I think it's a slam dunk for carriers that want to incorporate this. So agents aren't asking their customers redundant or unnecessary questions.
Right. So I want to talk for a second about fraud, which is a really interesting world and so significant. I mean, I don't know. I'm sure there's numbers out there, X number of billions of dollars a year are fraudulent payments to claimants that don't deserve the payment. Anyway, since the underwriting and the detection part is getting smarter, are the fraudsters getting smarter? Or do they tend to be just an individual who's maybe trying to take advantage?
So, I mean, that's an interesting way of thinking about it. From our perspective, we are really looking for the criminal fraud, right? So, and I'm just drawing very large generalizations. We look at injury claims to be largely about maybe 1 at absolute most 2% of the injury claim population is really organized criminal fraud. And then there's another 15 to 20% of that's exaggeration and abuse, right? And that's the toughest part of it, right? And 80% of it, call it, is totally clear, pay it, legitimate. So it's that 15 to 20% where we're able to look at that online population. We're able to see the activity, and this person may indeed have been injured, but they're not quite injured anymore, or it's not nearly severe as they said that was. Yet they've gotten used to it, or they've gotten counsel from an attorney. The attorney is encouraging them to um, talk about go get more procedures, complain more about what that injury is. Fortunately for us, because we monitor that claim from the first notice of loss on what that is, and we have that historical record, regardless of what comes down from social media, because it's the first thing an attorney will tell people to do is take their stuff down. So have they gotten smarter? Maybe, because the attorney tells them to take things down, but really it's already been out there. They've already posted on that. And for the type of stuff that we see, people do not seem to be showing any signs whatsoever of realizing that maybe they should not have posted these vacation photos, or maybe they should not have paid in that softball league and that batting average got posted, or maybe they shouldn't have posted that their band is playing on next Friday night. Right. It's, and again, there is so much of it, if there's 15 to 20% of it, we appreciate, we're not finding all of it. Right. We'll find a decent chunk of it, and other approaches, other models may find other aspects of it as well. By no means are we the one-stop shop, the only area. There's, again, tons of types of fraud across the whole spectrum, but we find a very, very meaningful percentage of what is findable online.
Well, and it's such a enormous expense all told that to achieve an ROI on it probably doesn't take, it's not a big leap.
No, and that's right. I mean, and our customers will tell us stories. People ask us, well, what kind of things do you see? And I say, we see things literally every day. And our customers talk to us about stories every day. And most of the time it's reducing what might've been a $75,000 or $100,000 payout to something that might be a $10,000 or $15,000 payout. Right. So that's sort of, standard type of things that we see. However, we get stories all the time of this one thing that you found ultimately saved us $450,000. This one thing that you found saved us 800,000 pounds in this one situation. So it's really not uncommon at all that there will be something that we identify that's massive, and that for itself will pay for, more than our entire engagement. But on the other hand, it's a lot about just really finding those areas that you really help them get back to work a little more quickly, reduce what that exposure kind of really would have been, and saving the company from having to do this type of stuff themselves.
I want to ask about competition, right? For 6 years, Rob and I have been doing this podcast, and we talk to data companies. We talk to companies who are helping out underwriters and finding fraud. What separates you from the competition out there? Because you are what we call a name brand company, right? When we think about a data company, we think about yours. Help me understand, what do you do that's different?
Sure. So really break it into two key areas. So people often talk about a data and analytics company. So that's the first way people often describe companies. And well, maybe technically we are doing analytics internally. We wouldn't call ourselves an analytics company or data and analytics company, because that's often where the carrier is providing the data to the company. And then, so there were a number of companies in my space in which they go to the carrier and say, hey, carrier, we're really sophisticated. We can do a lot of things. Give us all your data and we'll build you some model and then we'll tell you what happens. And in my experience, most of the carriers we work with really have the sophistication. So they don't really need that function. But that's a common sort of assumption that analytics companies make up. The carrier needs us to do the analytics for them. So we don't do that. We're not asking the carrier to give them their data so we can tell them what's going to happen with that data. So that's one major differentiating factor. But the second area, and this is really important, is that we appreciate that there's lots of data that's out there, and carriers have the ability to procure data themselves. And so we are trying to give them something that they can't find separately. So we're looking to create something that's unique. And so our data product, we are not a data reseller, right? We are not a data aggregator. We're also really not a scraping shop. We are not a computer vision shop. We're not necessarily an AI shop, right? Because at some level, right, what we're doing is we're doing all of these things. We're a multidisciplinary company that does all of these things together to create unique data products that can't be found elsewhere, that has specific predictive benefit. So our fraud product, we're doing all that work ourselves. Our small commercial, we created this data set. We procured all of that data. We have built this data set over more than 5 years to build this data set. And that's what's unique as opposed to other companies that might be resellers and they might find a source that could be interesting and pass that through. And there may be components of us doing that here and there, but by and large, our secret sauce, our competitive advantage is that we're the only act in town for these predictive data sources.
Wow. I mean that's great. That's great. I do want to ask a little bit about companies who are coming to work with you. I want to talk about what does that look like. So if a new company says, "Hey, I want to use your services," I mean, are they tying into your database using what you have? Give me a little insight into a new company in the first 90 days or so. What are they going through?
Sure. So we keep the friction as low as possible, right? And so we meet them really where they are. And if they can submit an API request of a data packet, we have an API, we respond back, and they can integrate that easily. That's one approach. In our claims products, often we'll be integrating with a claims team, and they may use a document management type solution, and it may be harder to integrate with an API. And they may just want a PDF report that's fed directly into a document management system. So they may give us a batch file daily or monthly even, and then we will monitor those claims, and then we'll proactively produce an alert and then feed that data management system with almost no IT integration, really having as seamless as possible. Those are ways that carriers will work with us, again, from an integration perspective. Whether it's our Minerva product, we have a UI, although we generally are encouraged system to system integration from via API. But for carriers where that might take time or they have other priorities, they can use a user interface that we provide for them to get access to this information while they think about how they want to incorporate and embed this data into whatever that specific workflow is going to be. And so we work with the carrier and really sit down and sort of we have a solution consultant that we apply to every given implementation. And we sit down and understand the specific environment, the workflow, what's going to be both the best way from a process and technology perspective that's going to be as easy as possible to get the most benefit. And that's been an evolution for us. Back in my old days in making really software, policy admin software for insurance carriers, I had a lot of experience with implementations, and anybody that's come anywhere close to anything like that understands just how much of a challenge those implementations are and can be, and they're not any fun.
Sure,
And
with
so,
a carrier.
right, it's tough work for everybody involved.
Terrible.
And so when we started this company, and sort of the idea is, hey, look, we don't do implementations. We're just an API, and it's really easy to integrate. But we also realized that that's maybe too far on the other end of the spectrum as well. And that for us now, it's saying, well, look, this might work in a perfect world, but let us work with you on this is how you handle an alert that looks like this. And this person is on vacation. This is how we would refer to this type of adjuster. And then this is the conversation we would have. And this is how I would track that. So we really work with a carrier to really get the most value for this type of this data, and has really found that to be much more successful than maybe in sort of our earlier days of just saying, here's an API, come and get it.
Sure, you have to hold their hands to a certain point. This to me is one of the great things. And Lee and I come from the claims side of the business, mostly P&C and mostly residential property. So, but what we know is that if you say to a carrier, I need you to change your process a little bit to use my product, that's bad.
Right.
I mean, for most providers, that's bad. So it has to be, like you keep saying, frictionless. It has to be simple, but there has to be enough hand-holding so that they use it.
That's right. That's right. And something we do now is we do full training, we do certification. We really try to take a much more proactive role. I'll certainly say in the post-COVID world, some of these things have been a learning exercise, I think, for carriers and for providers like us, because most teams aren't in a centralized location anymore. So most teams are distributed, and it's less likely that there'll be a HQ visit where you meet with all the relevant decision makers and work through it, or do a high level training. And so we really had to evolve and learn how can you really do a lot of the stuff where a lot of people are remote and training needs to be remote? And how can you create the engagement and really track utilization and you really get that benefit in an environment where it's no longer a call center where people are working or a home office. And so that's been, um, you know, one of some of the learnings that we really had coming out of COVID. And I think it's a really interesting world for providers like us of how do we get that utilization for carriers to think about that of how do you train in such a way and how do you get that engagement that traditionally used to be identified at a home office.
Right. Well, now it could be anywhere, right?
That's right.
And I want to talk about the business of your business for a few minutes. You guys sold, the company was acquired a few years ago by THL, I believe. And
Yeah, that's right.
and talk for a minute about working with private equity. We have a lot of listeners that are founders and that think about this kind of thing as well as the products and services that they're selling. How's that been? Share some insight there.
Sure. So it's been great. So we brought in a private equity partner that but majority control in April of 2022 of the business after us having founded 12 years prior. And so what that provided us to be able to do is reward our early investors. We had a number of angel investors. We had venture capital investors. We had strategic investors. And so it's really a way of, they've been in for a long time. They've been incredibly supportive. So this gave them an ability to get a little bit of liquidity in there. They also stayed in for a portion as well. So they have continued to be on this journey, just not at that same level. And ultimately what it's given us is we have basically now one common single investor. We're completely aligned, both management and the minority investors and the majority investor. We're all completely aligned now and focused and have 100% of the same objectives. And so that's, our process has changed quite a lot in how our board meetings have gone and the materials that we produce. It's been much more of a consistent rhythm for us as we've gone through this. And I'd say far fewer distractions because you're just dealing with how people, you're not dealing with as many potentially different interests or different timelines or other areas that might change the individual ideas about the direction of the company.
Before we go, I just want to ask about AI. It's on everybody's mind. It's in the press. It's in the stock market. It's pretty much everywhere. AI, of course, is something that you guys have been playing with for years or employing for years or deploying for years. Talk about where AI is today, Gen AI. I know this is a big question, but the impact on Carpe Data and what you see looking out into the future with Gen AI and its impact.
Sure. So I like to think about the current age of AI, whether it's talking about GPTs, whether you're talking about Gen AI, LLMs, is really the new generation of AI. So that's kind of the way I describe it sort of very broadly. And I think utilization breaks into like three core areas. I think the first main area is your internal best practices. What are you doing internally in the company to leverage this potentially amazingly powerful new technology across your marketing teams, your sales teams, your finance teams, HR, general management, internal software development? How are you thinking about, again, things that are largely consistent across other companies, but internal best practices? What are you doing as a company to get full value? And so for us, we have a team that specifically thinks about this across the organization of what are the best tools out there, what are the best ways of using, whether it's using ChatGPT, whether it's using various sales tools or marketing tools, whatever the things are. We are looking at those, measuring those, and excited about being all in and getting full value from this current age of new tools for internal best practices. So that's really the first, I think, important way of thinking about it. The second way is thinking about how does it affect our cost of goods sold. So do these new AI technologies enable me to produce and deliver my product at a lower price point? And if that's true, and then I potentially run the risk of having somebody else come in and cannibalize my business. Or as Jeff Bezos likes to say, if you don't cannibalize your own business, someone else is going to I might as well. And so we look at that. And so if we can do this at a much lower price point, that means I can offer my product at a lower price point, or find new ways of providing more value for the same price point. It's really important to us. So we think about that a lot. And for us, we absolutely have identified areas within our cost structure that we'll be able to eliminate or reduce thanks to massive new innovations in computer vision and reading, years of reviews, or using online presence. All these given areas is super exciting for us in that arena. But the third area that I think is in fact the most interesting, and frankly where we spend most of our time thinking about, is what's possible today that wasn't possible yesterday because of these new technologies, right? What can we automate? What can we predict? What sort of new innovative products are possible that you couldn't do before?
Right.
And so we've got a number of exciting new things in R&D. So some of the things, like, for example, we now have a loss control product. And so we're predicting where there might be a loss at a given business based on its online presence and maybe years of reviews. And so it never would be practical for an underwriter to read through literally 5 years of reviews on a given business, right? Or looking for keywords is not necessarily representative, which is before possible. But for us to be able to look through 5 years of reviews and maybe be able to derive things like, what are the common complaints? What are something about this that I never would have known before? Or and then at an ice cream shop that has a very crowded parking lot, and it's likely to have a loss because it's a crowded parking lot. And so we are already seeing things that we can derive that, again, wasn't possible before. So we can effectively do loss control at a much lower price point, leveraging this new technology than would have been possible by sending a person out or doing a phone questionnaire or some of these given areas that again, are very costly and not really scalable. So really inventing new things that weren't possible before is, I think, what's most exciting about this new era, and certainly an area that we are all in on.
Do you think that these technologies that we're talking about right now are key to Carpe Data 5 years from now, 10 years from now, are on the backs, your products and services are on the backs of these kinds of capabilities and tools?
Absolutely, because at the end of the day, what we're about is predicting outcomes, and using this type of information to predict outcomes is what carriers want, right? Carriers want to predict outcomes. We help carriers predict outcomes, and these technologies make that better. Now, where we differentiate ourselves is that we have our own rich, unique data sets. So we're building this technology on top of our own proprietary, unique data sets. So our outcomes are going to be different, as opposed to simply applying these techniques on a generic data set. And so it's important for us to maintain our competitive advantage by having proprietary, unique data, because that is where you are going to be able to create that differentiated alpha for the carrier. So we understand that, and that's really where we need to be. But really, these technologies, and I think we're really early days. And I think maybe we're seeing something of a plateau where things are, and we're getting full value for where that is. And as things continue to break through, we'll just get more and more value as the technologies get more powerful.
Well, fascinating, and we enjoy hearing about the company and about everything that you have going on and your insights around it all. It's always great to talk to an insurance guy who enjoys insurance.
I do.
These
are tough challenges.
We love this. And we remember times when it wasn't even sexy, unlike today. Look at the camera.
One of the things I had said though is that that I think we're now in a new era in which it is a little bit less sexy, right? It was exciting, at the very beginning of the launch of InsurTech, and I think we're really almost all the way back to a traditional carrier vendor relationship, where it's really, what have you done for me lately? Where's the value you're creating? I want specific measurable ROI, and that's where we are, and we understand that. That's where we come from, and that's I think the era that we're now in. And so I think it's not quite as exciting or maybe sexy as it was before, but at the end of the day, solving problems and creating big impact. What I like working with insurers is that things we do will save millions, tens of millions, hundreds of millions of dollars, but what we're doing moves the needle, and being able to have that kind of impact by creating these data products is exciting and fun. And that's what we look to do.
Well, these carriers had experience with buying stuff and that not happening.
Right.
No.
So,
We're
and we get that not from us, right? We have a lot of referential customers that are very excited about talking about the impact that we create, and we'll continue to. But the mindset, I think, is a little bit different. But that's okay, right? The mindset, it comes down to where's the value in what you're creating, and show me the ROI and show me the impact. And
Right.
that's where, frankly, that's where I want to be, and that's the kind of relationship I want to have with my customers.
Well, then from one tired, worn out guy to a couple of younger guys, we'll look forward to the future and hope it gets sexier, for God's
It's
sake.
exciting. It'll cycle back. It'll be sexy again.
Yeah, it'll be okay. It's again, impact of hundreds of $millions dollars has to be sexy all day, every day. Doesn't
That's
need to be
pretty
more
awesome.
Sexy, right?
That's pretty
Let me
awesome.
move the needle for you, and that's exciting for me.
That's right. Ask any chief claims officer. He would be very excited, or she would be very excited about that.
Mhm.
So we thank you, and we look forward to maybe having you on again. I know that you have a lot of thoughts about the industry
I
and
do.
about insurtech in general.
I do.
And we didn't even go there yet. So we'll save that for next time, and look forward maybe to seeing you in Las Vegas.
You got it. Anytime. It was really a lot of fun. I really enjoyed it.
Appreciate
Thanks,
it.
Max.
Thanks. We're on a roll.
What kind of role?
We're having amazing guests.
Amazing. I have been talking the podcast up quite a bit lately, sending notes out to people. I'm like, we just talked to so-and-so. You need to listen to this podcast when it comes out.
Yeah.
We've had some really cool guests come on.
I mean, this is like, he's a significant part of the insurtech world, and a significant part of underwriting tools that are
Yeah.
out there. I mean,
Name brand.
name brand, big deal. An innovator in the space, a thinker about the space.
And what a great guy just to talk to. Max
Oh, yeah.
himself, with his history and his knowledge, just a great conversation.
Yeah. And was wonderfully generous and so smart and pleasant. Good guy.
Yeah, great guy. Very, very, very appreciative of him coming on.
How do we do this? How do we do it?
I don't know.
I don't know. We just show up and it happens. That's
Special people around us. Special
Uh-huh.
people
I
around
get-
us.
I get a calendar that goes into my calendar, and
Yeah, calendar invite.
it shows up, and that's it. That's the end of it.
I
Oh,
show
well.
up and I do it.
Remember, folks, we do it all for you, our loyal listeners. That's right. You and you and you and you. Did I
There's
say
an
too
S
many
on it.
U's?
No,
Was that too many U's?
I'm just happy you put an S on it. Listeners.
I know that was kind of nervy because we all know it's just Astrid. Let's be honest. Hi, Astrid.
There's a few names out there now. There's a few names.
Are there? JJ?
Michael's going to email us. JJ.
JJ.
Michael's going to say, hey, what about me?
Okay, good point.
Yeah.
How about our wives? How about our wives? No.
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 I gave up that year.
Our children? Our children? No.
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 They'll listen to the intros and then they're like, okay, I'm done.
Yeah. Wow, that was interesting. Okay. So thank you for being with us. It was a pleasure. Thank you, Max Drucker. We really appreciate it. And until next time.
Goodbye, everybody.